Hi, my name is Rohida binti Abdul Wahid. Today, our group will be presenting for the subject of financial market and banking services. We have chosen for our group assignment, banking product and services title. Cambridge Business English Dictionary defines banking as the business of operating a bank. Next, in finance, a product is defined as a service that customer can buy from a financial organization to invest or save money. Meanwhile, services are defined as a business that provides something for people but does not produce goods. Therefore, banking products and services can be concluded as businesses that operate by bank to provide customers with a financial place to grow or save their money. Banking has a long history, starting in ancient Mesopotamia around 2000 BCE, where temples and palaces stored valuables and provided loans. During the Middle Age, banking flourished in Europe. Then in the 17th and 18th centuries saw the rise of central banks such as the Bank of England in 1964 and the introduction of the banknotes for its transaction. In the 19th and 20th century, banks expanded their services and becoming vital to individuals and businesses. The late 20th century introduced online banking, enabling customers to manage and make transactions conveniently. Today, advancements like mobile banking and blockchain continue to transform how financial services are delivered and accessed. Banks offer a safe place for people to deposit their money, facilitate payments, and provide loans for various needs such as buying a home or starting a business. Therefore, banking is divided into few scope and focus areas for users to choose. Retail banking that focuses on serving individual needs such as saving, borrowing, and making payments. Next is corporate banking and support businesses by providing credit facility, managing cash flow, and facilitating trade. The final one is digital banking that has further expanded access to financial services, offering convenient solutions through online platforms and mobile apps. Next, banking in Malaysia. In Malaysia, the banking system includes various institutions including commercial banks, investment banks, and Islamic banks. All of these are regulated by the Bank Negara Malaysia (BNM), which have oversee licensing and ensure the stability and integrity of the financial system. Malaysia is a global leader in Islamic finance. In recent years, the sector has experienced a digital transformation with the introduction of the digital banking licenses and the emergence of fintech solutions, enhancing financial inclusion and accessibility. Therefore, the focus and discussion on this assignment will be on conventional and Islamic banking. The main goal is to compare and contrast the key features, principles, and practices of both banking systems. This assignment will also explore the advantages and disadvantages of both systems. In addition, RHB Bank is chosen to illustrate the banking products of both systems, which will provide a better understanding of how they impact the economy, customer, and businesses. Next, I'll pass to the next presenter for the explanation.
Hello everyone, my name is Nurul Atikah binti Jami'an. Today, I'll be discussing two types of banking system, conventional banking and Islamic banking. Both serve the same purpose of financial intermediation but differ fundamentally in principles, practice, and customer appeal. Let's explore these differences and understand how they impact individuals and businesses. Let's begin with conventional banking. Conventional banks operate on a debtor-creditor relationship. Deposit holders are creditors and borrowers are debtors. The foundational principle of the system is rooted in secular and pragmatic ideologies, making it independent of religious law or guidelines. A defining feature of conventional banking is a reliance on interest-based transactions, whether through fixed or floating rates. Interest form the backbone of their operation. Banks offer a range of services like saving and checking accounts, loans and credit cards, and investment products. Customers can access these services through physical branches, online platform, or mobile application. The primary goal of conventional bank is profitability. While this comply with government regulation, ethical consideration often take a back seat. Their focus is maximizing shareholder value and ensuring financial growth. Now, let's turn to Islamic banking. Islamic banking operates under principle of Sharia law. This means it explicitly avoids transactions involving interest, known as riba, and adhere to ethical standards in all its dealing. Instead of interest, Islamic Bank emphasize risk sharing. For example, in a mudarabah agreement, depositors and the bank share profits and losses based on a pre-agreed ratio. In musyarakah, both parties contribute capital to a venture, sharing risks and rewards equitably. Islamic banks also integrate social responsibility into their operation. Beyond paying government tax, they contribute a portion of their profits to zakat and obligatory form a charity aimed at social welfare. This bank offer a range of services like Al-Wadi'ah as saving by Bitaman Ajil, Musyarakah and Musyarakah Mutanakisah as a home financing, Ijarah or Ijarah Tuma Al-Ba'i as a vehicle financing, Ba'i Al-Inah as a personal loans. This system ensures fairness, transparency and mutual benefit while upholding ethical principles. Let's compare the two systems side by side. First, religious alignment. Islamic banks adhere to Sharia principles while conventional banks follow secular frameworks. Second, revenue model. Conventional banks rely on fixed or floating interest rate, while Islamic banks avoid interest and focus on profit and loss sharing. Third, ethical consideration. Islamic banks avoid financing and ethical activities like gambling or alcohol sales. Conventional banks prioritize profitability, sometimes overlooking ethical implications. Fourth, transparency. Islamic banks provide clear terms on profit sharing and fees. Conventional banks, on the other hand, may have variable interest rate which can lead to unexpected costs. This difference influences customer preference and their choice of banking. Although Islamic banking offers ethical and interest-free financial models, they can appear complex to some customers. For instance, contracts like murabahah or ijarah involve multi-layer process that require understanding. In contrast, conventional banking products like loans or saving accounts with fixed interest are more straightforward and easier to grasp. This simplicity makes conventional banking more accessible to the general public, but Islamic banking is gaining recognition for its fairness and ethical standards. Now, how do customers decide between these systems? First, personal belief. Customers seeking Sharia compliance may prefer Islamic banking, while others may prioritize secular solutions. Second, financial tools. Conventional banks provide stability and predictability through fixed interest rate, while Islamic banks offer ethical alternatives. Third, cost transparency. Islamic banks excel in clear agreements, whereas conventional banks may have hidden costs tied to fluctuating interest rate. Ultimately, the choice depends on individual parties whether ethical value or financial simplicity matters. To conclude, conventional banks dominate the global financial landscape due to their simplicity and accessibility. Islamic banks offer a viable ethical alternative by prioritizing transparency, fairness, and social responsibility. Both systems have a unique strength, catering to diverse customer needs. It's crucial for individuals to align their financial decisions with their values and goals. Thank you.
Hi, my name is Ilya Narisa binti Samsul Bahari. I'll be talking about RHB Bank's dual banking model, a system designed to offer flexibility and accessibility in financial services. Let's explore how this model benefits customers and supports their financial goals. Firstly, RHB's dual banking model allows customers to choose between conventional banking products and Sharia-compliant Islamic banking services. This approach caters to diverse financial preferences, making it particularly valuable in regions with a strong demand for ethical, Islamic-based solutions. Whether customers prefer traditional or Islamic banking, RHB ensures they have the right options tailored to their needs. Next, in today's digital age, convenience is key. RHB has integrated both conventional and Islamic banking services into its digital platforms. Through their user-friendly mobile app and online banking portal, customers can easily access and manage their accounts anytime, anywhere. This seamless experience ensures banking is not just accessible but also efficient and hassle-free. Understanding Islamic banking can be a challenge for some, but RHB is committed to bridging that gap. They provide workshops, informational resources, and personalized support to help customers learn about principles and benefits of Islamic banking. This focus on education empowers customers to make informed financial decisions while building trust in the bank services. Now, I will explain an overview of RHB Bank's main conventional banking products. Each product addresses specific customer needs ranging from basic financial management to achieving long-term goals like home ownership or secure investments. Saving accounts are designed for individuals aiming to grow their money while retaining accessibility. Current accounts, on the other hand, are tailored for frequent transactions, making them ideal for businesses and individuals managing daily financial operations. The distinction between the two lies in their purpose, which are saving accounts prioritize interest earnings, while current accounts focus on liquidity and transaction convenience. Fixed deposit accounts are a secure investment option for customers looking for guaranteed returns over a specific period. These accounts provide higher interest rate compared to saving accounts, making them attractive for those who value stability and predictable income. However, premature withdrawals may reduce interest earnings, emphasizing the importance of aligning the tenure with financial goals. RHB Bank's loan products empower customers to achieve their financial goals. Personal loans cater to short-term needs like education or emergency, while home loans enable property ownership or refinancing. The flexibility of choosing between fixed or variable interest rates allows customers to align repayment plans with their financial preferences and stability requirements. Meanwhile, the credit card provides convenience and rewards for daily transactions. Customers can enjoy perks such as cashback and travel benefits while managing their short-term liquidity needs. However, the interest charge on unpaid balances encourages responsible usage, making credit cards a versatile tool for financial management. Next, I'll be presenting an overview of RHB Islamic banking products. These products are designed to align with Sharia principles, which prohibit interest-based transactions and emphasize ethical financial practices. RHB Islamic offers various solutions that meet modern financial needs while complying to Islamic values. Let's explore these products in detail. RHB Islamic savings and current accounts cater to customers who want a Sharia-compliant way to manage their funds. The Wadi'ah principle ensures funds are kept safe, while Mudarabah allows customers to benefit from profit sharing instead of earning interest, which is prohibited in Islam. Next, RHB Islamic fixed deposits provide an ethical investment option. Unlike conventional fixed deposits that pay interest, these operate on a profit-sharing model. This ensures both the bank and the customer benefit equitably from the investment. For your information, RHB Islamic home financing is ideal for customers seeking to purchase property in an ethical manner. The Musyarakah Mutanakisah model promotes shared ownership, while Murabaha provides a clear and transparent purchase plan, ensuring compliance with Islamic values. Regarding personal financing, RHB Islamic helps customers meet their financial needs without resorting to interest-based loans. The Tawarruk structure ensures the transaction is compliant with Islamic principles, making it a practical and ethical choice. Lastly, RHB Islamic credit cards provide flexibility and convenience while complying to Sharia principles. Unlike conventional credit cards, these cards avoid interest by charging a fixed fee, making them an ethical option for managing expenses.
Assalamualaikum and salam sejahtera. For my part, I will be explaining the advantages of conventional banking and Islamic banking system. These two have distinct strengths that benefit their customer in various ways. Let us to start with the advantages in conventional banking. Conventional banking has various features that make it a popular choice for individual and business. Among the advantages are as follows. First, stability and security. Conventional banks are often well established and regulated by government entities such as a central bank, ensuring stability and security for depositors. Wide range of services. They offer a comprehensive range of financial products including checking and saving accounts, loan, mortgage, credit card, and investment services. Physical branch access. Conventional banks have many physical locations that allow customers to access service in person, speak with representative for financial advisors, and conduct transactions in person directly. For global accessibility, widely accepted internationally, making it convenient for global transactions without religious constraint. So, conventional banking also provide options for customers to choose between fixed for variable interest based on their preference, higher return potential. This is because it is involved in various types of industry, including non-halal industry such as gambling and alcohol. Advantage of Islamic banking. Islamic banking stands out as financial based on Sharia principles, upholding justice, ethical practice, and social responsibility. The main advantage of Islamic banking: first, ethical investment. Only invest in ethical sector excluding industries such as alcohol, gambling, and pork products and related products. Second, promote financial justice. It creates a balance for net profit or loss between the lender and the beneficiary. Third, prohibit of interest. Islamic banking prohibit charging and paying interest, which is considered exploitative. 4. Reduce the impact of harmful products and practice. Restrict the goods and services that are restricted in Islam, such as alcoholic beverage, tobacco, gambling, and others. Religious comfort. To extend financial service to those who do not deal with conventional banking institutions for religious reasons. Lastly, risk sharing. To operate on a risk sharing principle where both the lender and borrower share the risk of any investment. In conclusion, although the approaches are different, both offer unique advantages that can be utilized by individuals and business. By understanding this difference and advantage, customers can make smarter decisions based on their needs and values.
Hi all, hope that all of you are in good health. Today, I'm Nurhani will share about the disadvantages of both conventional and Islamic banking systems. While these systems offer numerous benefits, they also have limitations that affect customers and the economy. Let's dive in. Let's start with conventional banking. One major disadvantage is its interest-based system. For example, during the 2008 global financial crisis, reliance on high-interest subprime loans led to widespread defaults and economic instability. Another issue is ethical concerns. Conventional banks often invest in controversial sectors like alcohol and fossil fuels. For instance, Wells Fargo faced criticism for funding the Dakota Access Pipeline (DAP), which raised environmental and ethical issues. Also, conventional banks can contribute to financial instability. Risky investments and speculative lending, like those by Lehman Brothers in 2008, can destabilize economies. Lastly, let's not forget about the complex fee structures. Hidden fees such as overdraft or late payment penalties undermine trust. Bank of America, for example, faced lawsuits over undisclosed overdraft fees. Now let's talk about the tools businesses use to handle this risk. Derivative contracts. These are agreements based on the value of an asset, and they come in three main types. The first one is forward contracts. These are like custom-made deals to buy or sell something in the future at a fixed price. They are flexible but riskier because they are not traded on exchanges. Secondly, future contracts. These are standardized and traded on exchanges, meaning lower risk because clearinghouse ensures both sides follow through. Last but not least, the options. They are my favorite. They give you the right but not the obligation to buy or sell. Think of it like reserving a table at a restaurant. You can use it if you want, but you are not forced to.
Thank you, Hani. Therefore, as a conclusion, banks play an important role in modern economies by offering financial products and services that support individuals, businesses, and governments. The choice between conventional and Islamic banking depends on individual priorities, including financial goals, ethical consideration, and personal beliefs. As banking continues to evolve, especially with the rise of digital technologies, we will become even more accessible and efficient and will continuously provide customers with a good product and services. With that, thank you.